Gold price forecast, bearish grip tightens as $4,000 support snaps. Spot gold has broken below the psychologically critical $4,000 mark, hitting a multi-week low. The breakdown highlights intensifying bearish pressure, pushing the metal toward major corrective targets. The macro headwinds, rates, dollars, and oil. The broader macroeconomic landscape continues to penalize non-yielding assets like gold. The energy inflation loop, Middle East tensions have driven oil prices higher on supply disruption fears. Even though recent core inflation data was softer, high energy prices increased the risk of sticky headline inflation. Fed September rate hike. To combat energy-driven inflation, the Federal Reserve is expected to maintain its hawkish stance, increasing the probability of a rate hike in September. Strong yields and dollar. High U.S. Treasury yields and a strong U.S. dollar continue to strip momentum from precious metals. Immediate wedge support, $3,800 to $3,900. Gold is fast approaching the apex of a major daily wedge pattern. The lower boundary sits at $3,850, while the absolute floor rests around $3,800. The bearish trigger, a decisive close below $3,850 would signal a sharp, rapid liquidation. This flush-out could act as a capitulation move to mark the final cyclical low. The bullish pivot, $4,200 to invalidate the bearish structure, which includes a series of rounding tops on the 4-hour chart below $5,000 and $4,500, gold must reclaim $4,200. Upside targets, $4,350 and $5,000. Reclaiming $4,200 shifts the target to $4,350. A breakout above that level clears the path toward the psychological $5,000 milestone. July seasonal outlook, prepare for choppiness. Investors should brace for near-term volatility. Historically, July is known for choppy, erratic, and overlapping price action. It is highly likely that gold will experience sudden, head-fake swings within the $3,800 to $4,000 range before establishing its next major macro direction. Silver price forecast, bearish momentum puts the $45 to $55 in focus. Silver daily chart tests the critical $55 support level. The daily chart for spot silver shows the same bearish pressure below the $64 area. The price is now approaching the lower boundary of primary support region at $55. A break below $55 will open the door for a move towards the major accumulation zone between $45 and $55. As long as the $45 support holds in spot silver, the possibility of strong rebound towards $72 remains high. However, silver prices remain under bearish pressure and look set to move towards the $45 to $50 area in the short term. Silver break below $55 could trigger a drop toward $45 to $50. The 4-hour chart for spot silver also shows strong bearish pressure as the price is now approaching the lower boundary of the base pattern. The black dotted trend line extending from the May 2026 highs indicates that prices remain under extreme bearish pressure. A break below $55 will open the door for a move towards the $50 area. On the other hand, a break below $50 will indicate further downside towards $45, which is considered the final drop before the next rally higher. Silver remain under pressure as oil prices, treasury yields and the US dollar stay strong. Silver could also move towards the $45 to $50 area if the $55 support breaks. These lower levels may attract buyers, but the short-term trend remains weak. Gold needs to recover above $4,200, while silver needs to break $64 to improve the bullish outlook. Both metals may remain under pressure until the U.S. Treasury yields start to ease.